Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Morning, Will. How are you?
I'm doing well. I'm hopping in on WCMU this week from the road. It's county fair season, and so I'm doing some work at a county fair here in Ohio. So I'm actually shooting out of a camper this week. So hopefully everything still operates smoothly in
Which
that.
county? Which county fair?
Vinton County, so it's kind of
County, yeah.
south central Ohio down here.
Yep.
So it's pretty
Very
neat
good.
deal. Yep, yep. So are you going to any county
I'm
fairs this
in
week?
Columbia. Yeah,
Yeah.
a lot of our county fairs have just wrapped. Well, I shouldn't say a lot. Quite a few of them though were the last couple of weeks. So
Yep.
I'd say a good chunk of Missouri's county fairs were completed either last week or the week before. So we're kind of on the tail end. State fair is getting ready to start here in about
Yep.
another 10
Oh yeah.
days. So we're getting
Around the
close.
corner for
Yeah.
sure. So, well, good luck to any fair exhibitors who maybe haven't shown yet, and hopefully everyone who has had a good experience. So, looking at this week's price changes, we did see a lot of positive adjustments looking across the board, starting with September corn, 423 up 49 cents at 548. December 23 up 50 cents at 556 on those corn contracts. Soybeans for August up 20 cents at 1504. November soybeans were up 28 cents at 1406. At soybean oil for August was up 6.14 cents at 70.9 cents. Soybean meal by the short ton for August was up $13.10 at $447.50. The 23 wheat crop for September up 92 cents at 745. July wheat up 65 cents at 764 and that's for the 2024 July wheat crop. And then crude oil for September was up $4.34 a barrel at 78.37. So Ben, just looking at those price adjustments, a lot of upward movement to round out the week. What are your initial thoughts there?
Well, a lot of the fundamentals were overshadowed with developments in Ukraine with Russia, or the Russia attack on Ukraine this week. Uh, Most notably, right? So, like up until this point, up until this week, Russia's attacks had largely been on the eastern side of Ukraine, along the Black Sea corridor, ports of like Odessa, for instance. Those were expected at or I shouldn't say expected, but those were anticipated maybe at the conclusion or the expiration of the Black Sea Grain Initiative. What was different about this week is Russia started attacking the ports along the Danube River, which has been an alternative source of grain for Ukrainian suppliers. And that's notable because it's closer to NATO countries. It's a primary channel for a lot of product, not just agriculture, not just Ukraine product, but it really did kind of shift to really kind of resonate that Russia is now trying very adamantly to stop Ukraine exports of products, and it's not just on the Black Sea side; it's now on the western side along that Danube River. So that's what really sparked markets this week. Everything was kind of overshadowed by that.
Well, and when you look at the timing of this, and I don't want to speculate too much about things that I don't know too much about, but you look at the timing, and this comes almost directly after the trade corridor agreement ended, and so it seems like it was one of those things where the first opportunity Russia had to do something like this, they took it. So I don't know if that's a signal of the overall tone on things to come potentially, or just the opportunistic approach that Russia took there. So watching how this develop, I would assume would continue to drive a lot of market speculation.
Yeah, absolutely. And I'm no war scientist, or I don't study conflicts. I guess is what I should say. But I would certainly say that it does seem that the war and conflict is intensifying at the moment, and we're seeing a strong premium built into these markets. There's very little fundamental justification at the current time, right? This is all kind of speculation that we're going to see some trade uh, shuffling around the globe of where products are coming from to supply different countries. China, for instance, is a big player here from the standpoint that they've benefited from that Ukraine Black Sea Grain Initiative of exporting corn and wheat out of Ukraine into China. And so now where does China look? We saw them buy some cargoes of soybeans from South America and Argentina, even some from the US for this next season. Maybe that's them starting to look maybe to build up some supplies or some alternative marketing channels. But right now, my point is a lot of this trade flow that is being built into our markets is kind of speculation at the moment, due to this escalation in the conflict in Ukraine.
Well, talking about those fundamentals, and I want to flip over looking at the U.S. and the growing season so far. We saw corn condition flat on the week, soybeans drop a little bit. So thinking about where we sit right now, we're entering the last week of July. We're in the last week of July. How do you see the I guess level of attention whenever we're looking at these crop conditions, how that's going to impact the market prices as we move forward? You can't ignore those fundamentals for forever.
Yeah, absolutely. So, rightfully, like you just mentioned, corn conditions were flat on the week. There was maybe the expectation, or there was the expectation that corn conditions would rise just slightly. Soybean conditions fell when the expectation was flat. So I think for, corn and soybeans, which is, kind of our primary crops that are, pollinating or have pollinated at this point, that's where the focus is. And so maybe a little bit disappointing from that standpoint. Another big crop, cotton, improved slightly on the week. Conditions are much better than what they were a year ago, but still relatively low if you look long term, right? Historical here. So a couple of comments I'll make about crop conditions. First and foremost, I find it interesting that our crop conditions are almost exactly the same. If you take into account all 5 categories, our crop conditions are almost the same this year as they were in 2019. 2019 actually wasn't a bad yielding year. It wasn't great, but we took a lot of acres out because that was the prevent plant year. And when you take some marginal acres out, it tends to increase the national yield. So I'm not sitting here to compare 23 to 2019. In fact, I don't really like comparisons to any year. I think everybody's trying to find an analog year that prices are following, and every year is different. And there's things that matter now that didn't matter back then. So conditions certainly do play into this as we look ahead. Right now, my forecast based on a whole bunch of different factors that include crop conditions, but also expected weather going forward, has a corn yield of 176 bushels to the acre. That's down from where USDA is at 177.5. But 176 bushels per acre on the corn side, even with USDA's what I would consider optimistic demand at the moment, actually continues to increase our balance sheet, right? That's enough supplies of U.S. corn at 176 bushels per acre to increase our balance sheet. You have to go all the way down to 174 bushels per acre for you start to maybe just flatten out, right? So increasing supplies on the corn side. My soybean estimate is right at 50 bushels per acre, if not just slightly below, right? But right at 50 bushels per acre. And even at 50 bushels per acre on the soybean side, that's tightening our soybean balance sheet. Okay. So I continue. I've said this before, and until something changes my mind, I guess, our soybean picture is the tighter of the two markets of between corn and soybeans. In fact, the corn balance sheet, there's a lot of expectations that Ukraine's not going to be able to supply the world with feed grains. We're going to have a short corn crop here in the United States. And so those are the bullish factors. And I'm just not sure we have the justification for all of that yet. And so I do say that I think the market rally in soybeans is legitimate. For the corn market, I'm maybe a little bit skeptical still.
Well, and it's been interesting watching how the attention of growers has seemingly moved across the Midwest and around the country a little bit this growing season, because early on, you had a lot more than normal rainfall out west, and then you saw some dryness in Iowa, and then that kind of flipped toward the east, and now Iowa's getting some more precipitation there. Then you see dryness kind of pushed down, I guess southeastern now, and now looking at the forecast, you see some rain. We just got some rain here in Ohio. I don't know if you've been getting much out where you're at around Columbia. But it's been an interesting perspective watching these kind of shift throughout the Midwest. So how do you see traders and grain marketers really paying attention to the next, these extended forecasts that say maybe some rain on the Eastern Corn Belt, maybe some dryness in the Western Corn Belt? How do you see that fitting into the picture?
Well, again, I think some of this is being overshadowed a little bit by the conflict overseas, because today would Tuesday here as we're talking, crop conditions underperformed, and yet the market's down. The market's down because we're traders are taking kind of a breather from some of the conflict news, right? So like some of these things don't always line up perfectly. Another example was last week when nearly everything on the soybean side suggested that soybean prices could be down, and yet they were up, right? Soybean oil was up five or almost over 6 cents a pound last week, right? So, sometimes these things don't line up on the fundamental side. But to your comment about how does traders look at the forecast going forward, so the pattern this season has always been that we're 1 week away from the weather pattern really shifting to a wetter pattern, right? And that's kind of been the message all summer. We're 1 week away. The problem is we're always a week away, and things kind of transition. We have seen a more active weather pattern here in July in a good chunk of the country. Some isolated thunderstorms that are kind of riding the things, and those are backbreakers for some people. If you continue to miss that ridge, and your drought continues to intensify, there's certainly pockets that are like that, right? However, hopefully some of these storms start trickling in and hitting some of these pockets. And I think that's maybe the concern, is that it comes too late. August is still, a critical time for soybean production. So there's still opportunity on the soybean side. But for corn, a lot of these corn, especially in these hot pockets, is toast. And we've seen silage production, ahead of the curve this year just because it's dry and the silage is ready.
So, Ben, I don't know if you've had breakfast yet, but you mentioned hot pockets and toast in the same sentence. So I don't know if you're getting hungry.
Nice. I am hungry, actually.
but just on that, it kind of does sound like I don't know, maybe what you call a Wile E. Coyote or Elmer Fudd type of weather, where you're almost getting what you want, but it's always just out of reach, and you kind of wonder how long that can sustain before you start seeing these prices push higher. You see those crop conditions continue to drop, but really, Ben, looking forward to the rest of this week. Looking at reports and things to watch that could be market movers. What are you really paying attention to, and what should farmers and ranchers be paying attention to?
Yeah, so it's Fed week again. It's another Federal Reserve Open Market Committee report week. The reason I bring this up is the last time the Federal Market Committee met, they came out and they announced a very rare and unusual announcement that there would be 2 more interest rate hikes yet in 2023, and the market was not prepared for that. They maybe were considering the possibility of another hike. They certainly were used to the language saying, we'll reevaluate if market conditions justified. But to come out and say that 2 more hikes yet this year, that was very definitive. And so the market has priced in a full, they have priced in 100% of an increase this week. So another 25 basis point to bring that target rate up to just under 5.5%. I think the interesting thing is what comes out of the press conference. Does the Federal Reserve and Jerome Powell double down that there'll be yet another interest rate hike this year, or have they seen enough softening in some markets to justify that? So I expect they'll stick with their language that there's another interest rate hike yet this year. But that in itself will be interesting, because that could be enough to switch the conversation off the war back to maybe some macroeconomic headwinds, if you will, to the commodity sector.
All right, Ben. Well, it's always good to have your knowledge and information to talk about these things that I don't always understand. So I appreciate it. Viewers, listeners, if you'd like to learn more about our program or what we do, or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thank you again. I'm Will Robinson on Brownfield.